All right, there's a lot of talk online this morning about the 60 Minutes episode from last night. So I kind of want to put it into the right perspective for auto. I'm super glad that it's generating a lot of conversation. I'm super glad that it's kind of a water cooler conversation this morning. But I want to make sure that we don't miss the nuances and we don't kind of go off on a tangent. Specifically for how this relates to DRP shops. If you're a DRP, your ears need to perk up and you need to go watch this video and pay attention. So let me give you a summary. It's about hurricane claims in Florida, but five other states basically are also involved in this. It's where the insurer has contracted with third-party administrator, an IA. That IA can be an individual. That IA could be something like, I don't know, maybe let's say a SnapSheet or an Alacrity or an SCA or Frontier Adjusters or whatever. But that insurer contracted a TPA. They went and inspected homes for damage and completed appraisal reports for those damages. They then turned those appraisal reports into the insurer. The insurer changed them, reducing them sometimes by 90% of what was estimated by the field appraiser, and then sending that estimate back to the customer as if it was written by the field appraiser. Just soak that one in a little bit, right? So now there's some massive lawsuits on, was this intentional? Is it intentional defrauding, reducing claims payments? And in the story, it talks about really the insurers taking sometimes positional stands. So you do have one adjuster that says when he was hired, he was told specifically, we're not buying asphalt roofs. That was one of the things he said. You need to write repair on everything. In a way, we're going to force lawsuit. We're going to force the customer to file a lawsuit before we're going to voluntarily make any payments. Now, some of you should have some tingling in your ear because you've gotten letters recently on automotive claims where the insurer is denying your estimate, and that letter says, we make no voluntary payment at this time. There's a reason that language is in there, and this story is one of those reasons. The things that can happen when it's time to go to court, we make no voluntary. So there's a reason they have to put that. We're not voluntarily agreeing to pay to this shop estimate. If you're getting those letters, P.S., you're doing a really, really good job as a shop, and you're writing really good appraisals. If you're not getting those letters, we got some work to do, right? All right. So that's really the gist of this whole story. And then there's some talk about, is that insurer fraud? In other words, there's insurance fraud. There's what maybe shops get accused of or contractors get accused of. But do insurers create or do fraud to their policyholders and consumers? Well, the answer is that yes. And then there are charges for that. And there are some things that can be done. I do agree with this story where it talks about until we put some people in handcuffs, until a VP of claims, until a CEO of an insurer, until a field adjuster, until somebody gets in handcuffs, probably not going to make a lot of changes. But I'm one for going, even if I just get one person, right? Even if I get one victory, that's good enough, right? I'm happy for that. So the things that I want you to pay attention to, I know there's a lot of people going, oh, this is going on in the auto industry, and it is, but it's different. See, in this story, the third-party administrator writes their sheet, sends it up, and it's changed without their knowledge, right? This guy is still holding his original appraisal in one instance, which was for $400 and something thousand, that gets changed to like $20,000. So he's still holding his original appraisal. He had no knowledge that it was changed, nor did he agree or approve to those changes. DRPs. You are a TPA of sorts. You are a vendor in which the insurer has signed this kind of back deal agreement. You're not subject to policy benefits or anything, but you're a TPA. You're an independent adjuster in a way. And I can make a really good, strong case for that. And I'm looking forward to the opportunity one day when I do make a case for that, for agency rights having been assigned to you like a TPA. All right. You make the changes. That's the difference between you and this story. You accept the change request, you rekey your estimates, you make changes from repair to replace, you delete operations, you fail to acknowledge blatant statements from the OE about required inspections after a collision. You may make agreements we don't pre-scan. I mean, if I think of all the things in these DRP agreements that you've agreed to, kind of like that adjuster says in the story about, well, we're not going to replace asphalt roofs. We're going to write repair and make them sue for it. You guys are knowing partners in this. And I know DRP shops get so mad at me. I'm like, why you pick on us? We're better than most hack shops out there. We're not the only ones that make mistakes. You're right. And there are worse shops, right? And I used to tell myself that too when I was a DRP manager. Hey, at least it's not a dirt floor behind somebody's house with 5 dogs or whatever. But why I'm so hard on the DRP is I expect so much more from you because you are held out to the customer as this higher standard. They have no reason not to trust you, which is what we talk about in this video. The victims of insurer fraud never know they're a victim of insurer fraud until it's too late. So you're making all these deals, you're making all these changes. And sometimes I talk to DRP shop owners that just aren't really aware of how much their estimators are making changes and giving in, right? You just accept these change requests. Sometimes you're accepting change requests after the vehicle delivers, and then you're resubmitting your estimate sometimes 2-3 weeks later. But the difference here is the insurer actually gets you to put your name on it. Whereas in these situations, these appraisers can show that they didn't put their name on it. Every time you accept those change requests, every time you rekey an estimate, every time you make modifications and send up a supplement, that's in your name. That's on your header. And so the insurer then goes back to the customer and goes, this is what your shop wrote for. Yes, they're on our program, Mr. Smith, Mr. or Miss Smith, but you selected them. They were your choice, and this was what they put on their appraisal. And that's kind of the big key difference that we have to be aware of when you're watching the story. If I was a DRP, I would strongly encourage you to visit with your attorney, send them this video from 60 Minutes, make them watch it, then go in and sit down with them and talk through what your exposures are and what the potential consequences of that are. Then I would go visit with your insurance carrier and talk about what your liability coverage is and what those exclusions are. So if you think an insurer will reduce payments on owed claims to try to save money, then wait until you do something that falls under an exclusion on a liability policy that they don't have to pay. Because then they don't not only do they have to pay the verdict, they don't have to pay the cost of defending you, which when an insurance company hires an attorney, it's not really cheap, right? So there's a lot of benefits to exclusions. So make sure you're aware of what exclusions are there and what might get you in trouble. Part two of this, if you are even a DRP and not a DRP, if an IA, SnapSheet, or Lacrity, Frontier, as any of those people are assigned to a claim and they call you and say, I need these documents or I need this, I need to come look at the car or whatever. You don't just let anybody come look at the car, right? The customer gave you permission to allow their insurer. The insurer bypassing or not bypassing, but giving that authority to another person doesn't give you the authority to let anybody see all the documentation. So it's really important that you narrow down what the scope of that assignment is. So if it's SnapSheet, then they get to determine what's paid. If it's a regular random field guy who's going to drive by your shop, he's probably only authorized to take pictures. You need to know what their scope is. So I'm not going to argue with Tim, the independent adjuster, if he only has authority to take pictures. But I think it's also important the consumer understand what the insurer has given as authority to these different people to handle their claims and who's ultimately responsible. So make sure that you understand scope before you allow anybody access or you send documents off to anybody that's a third party. Make sure that you pay attention to the fact that that there is a lot of holdback, that there is a lot of court. So you've heard me talk this week about, or last couple of weeks, how we're undefeated in small claims court this year. Well, ever, but undefeated in small claims court because the insurer is just pushing the customer to file some sort of suit, and then a majority of these are not because there's been some massive, wonderful prep work or documentation. They're paid before you even go in. Like somebody shows up to the small claims court and hands over a check or whatever. But there is a power in charging the customer. So once that customer has actually incurred the debt, then a whole other system of things start to get triggered on the insurance company side. So don't be afraid of that. I know it's scary, but there's some good benefits that can happen for the customer as soon as they've actually incurred a loss of something that was insured that they're insured not pay in full. So don't lose power of that. And pay special attention. Litigation is picking up. I have more claims on my desk that are death, injury, post-repair inspection issues than I've ever had before. I know some of that is just, you search the internet, you find us, and that so I'm going to get a higher percentage of that volume anyway. But I also feel that our plaintiffs' attorney associations, with all the presentations that are going on right now, which mostly in the plaintiff attorney sector, it's focusing on Tesla. But there's all these presentations being made at plaintiff attorney associations. And so they're much more aware of opportunities. We'll just call it that. Within our industry than ever before. I think we all thought the John Eagle case was going to cause a flood, but that was a one-time kind of weird thing. These things going after OEs and the understanding now of OE certified repair programs and what the possible golden goose of that is bringing a lot of plaintiff attorneys into it. And so shops, you're going to get caught in the middle because the insurer is going to say it's your fault. The OE is going to say it's your fault. So you're going to have to make sure that you are well prepared, or that you at least fully understand the risk that you're taking on if you continue. So I'm going to have a link to the full 60-minute video on YouTube. You can go watch it. And then I've also got a snippet of my favorite part of the 60-minute video for you to watch. But just understand, when you watch this, DRPs, please, 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 in your heart and core, know that this whole thing is talking about you. When we get to the on the property side, it's real field TPAs and third parties. When we get to the auto side, we turned you into that. And you knowingly and willingly do it. You signed a contract of services for it, and you're repeating that behavior on a daily basis. So know what your estimators are deleting and changing, and what the ramifications of that may be for you in a story like this in the future. So everybody have a great week. Happy Monday, and see you.